Hi everyone. Welcome to what is now episode 8 of the Bitcoin liquidity series. It's a Twitter Space series where we deep dive on the most interesting projects across both the DeFi and the BTC-Fi space. And today we're excited to be joined by Captain Jack Bearow, head of DeFi at Berachain. Sir, thank you very much for joining us. It's a pleasure to have you with us today, and I think there's a lot of exciting things to talk about.
Yeah, excited to be here. Thank you for having me on, and excited to chat a little bit more about Berachain.
Sounds good. Let's do it. So I guess to start off with the most fundamental of all questions, can you tell us a bit about yourself and what you're building at Berachain?
Yeah, I'm Captain Jack. I've been at Berachain for I don't know, something like 9 or 10 months now. But I've been in the ecosystem for years. I think I bought my first Berachain NFT in something like November of 2021. It sounds right. So it's been quite a long time. So I've gotten to see Berachain's journey from uh, just an NFT platform all the way to building layer one, and there was this fun period of a couple years in the middle there where you didn't actually know if it was real or not. And so, through that, the Berachain cult was kind of formed. Before Berachain, I worked at Polygon in a similar role. Before that, I wrote research for crypto institutions, and before that, I worked in TradFi. So, been around for a little bit, and at Berachain, my focus is kind of a hybrid of working with application teams. A lot of them are in DeFi, but we spend time elsewhere as well. As I think basically every application in crypto has to touch DeFi in some capacity at this point. And then I also spend a lot of time working on kind of fun strategic chain level projects for things like Boyka, right? And so basically we come in and we have some outcome, let's say, that we want to achieve, which in this case was seeding liquidity on a chain. Um, and we have some like broad goals around how we want to do it, and that like we want it to be more transparent or more trustless or more capital efficient or all of the above. And you basically then work backwards and try and come up with a product that can do all of those things, or at least most of them. And so yeah, that's kind of my job is to figure out how to build those things and then find the right people to do them and then execute on bringing it to market.
Awesome. It doesn't sound like the worst job in the space. Sounds very exciting. So, out of curiosity, what drove you to buy your first Berachain NFT? Going
Um,
straight from TradFi to Bong Bear's NFTs, or
yeah, I think those two things may have even been concurrent. The
fair enough.
the the answer is, it was 2021. The markets were pretty insane. You know, there was I was involved kind of from like day one with Olympus DAO at the time.
Okay, is
And
this peak DeFi summer or
yeah,
before
pretty
that?
pretty close. Well,
Okay.
I'd say it was after like peak DeFi summer, but like right around in that second wave of DeFi activity that happened right before things kind of started to unwind. Um, but like coming off of Olympus DAO, this like rebasing idea I thought was like pretty fun. And then there was an NFT collection putting an interesting twist on it, and it was bears smoking weed. Like, what's not to like? And that was about all the thought that
Ah,
went into it, right? Like at the
okay.
time, the market was so frothy that like you just wanted to have money in stuff, and then most of the time it worked
Yeah.
out. And this ended up turning into like a higher conviction thing for me over time. And so, that wasn't the intent from the outset. I wish I could say to you day one, I like sat down and I was like, yes, like these are the
This is it.
ones. Yeah, this is the one that's gonna I'm gonna make it all back in one trade. But the answer was like if you had asked me on that day, I probably would have been like, yeah, I'm gonna sell this in like 2 weeks. But something kept me around, and here we are,
Yeah.
3.5 odd years later.
Funny how life works out. Can you tell us a bit about Berachain? So of course, it's a kind of a wide question. Um, where to start? So take me through I guess the vision of Berachain, the origins of Berachain. So you touched a bit on this rebasable NFT system and how unique that was back then. Like, what was Berachain back then, and what is it today?
Yeah, back then, Bearchain was just a bunch of mentally ill people screaming in a Discord. And today,
That was
Berachain is a
crypto back
bunch.
then.
Yeah, exactly. Today, Berachain is a bunch of mentally ill people screaming in a Discord with a chain. And so, really, really important distinction there. But look, like, what is Berachain? How did it kind of come to be? I think like Berachain came to be in effect because of who the user base was, right? Like I said, it kind of spun out of this really DeFi adjacent wave. Um, and as a result of that, a lot of the folks that were involved, both from like the founder level all the way to the community, tended to be really DeFi native. Um, and there was this moment where like folks were looking and talking about what was the primary overhead for chains. And there was this kind of consensus that look like there's enough fast, cheap block space right now in the L1, L2 universe. And the real issue is the way that value is returned to users and to apps. Um, and from that, Berachain was effectively born. It was this idea that that tech aside, there's got to be a better way of designing economics for a blockchain. And from that, proof of liquidity was created, and it's gone through a few iterations over time. I'm not going to sit here and pretend that there's this like immaculate conception with everything born perfectly immediately. It's changed a lot in design over the last couple of years, but the end result, we hope, is something that is kind of meaningfully more interesting, and I can talk through in a little bit more depth if that's interesting for you all, and like how I think proof of liquidity kind of works simplistically, and what the implications are. But at the end of the day, right, like the simplest way to think about proof of liquidity is through the lens of where block rewards go today. And so if you think about how block rewards work on a normal proof of stake chain, a validator validates the network. They have some stake that provides economic security to the network. The act of validation is fairly commoditized at this point, right? Like depending on the chain.
Mhm.
But for most EVM kind of L1 style chains running close to ETH2 spec, it's fairly commoditized, and so your risk of getting slashed is fairly low. Um, and so you're providing a lot of value to validators for doing what is a fairly commoditized service. And they're not at all forced to ever interact with or ensure that the application layer is successful or that users give a shit about their chain outside of the price of the governance token effectively, right? In that like your returns as a validator are basically a function of the staking rate because that determines the inflation rate, um, and the price of the token and whether or not you get slashed. And that's like kind of it, right? And so you'll notice that none of those variables, aside from maybe like price of the governance token, really indirectly, are actually tied to anything that happens from a user facing perspective. It doesn't have to do with application success. It doesn't have to deal with whether users give a shit about the chain or not. It's literally entirely separate. There's no way to normalize that value proposition, right? Like in your ideal universe, validator profitability should be constrained if no one wants to use the chain. And instead, that money that would have been going to validators should instead be going to people, applications, users, whoever it is, to get people to want to use the chain. And then chains try to solve that through grant programs and all these other really inefficient and lagging ways of allocating capital. And it doesn't work, right? And then Berachain solves this effectively via proof of liquidity because by default those block rewards go to applications in the form of incentives on rewards vaults. That's what proof of liquidity is, and then applications pay validators for those block rewards. And so if there's a lot of demand for those block rewards and for economic security from applications because the on-chain economy is bustling, right, then
Mhm.
validators are going to get paid really well. if there isn't as much there, but let's say the price of the governance token is high, relative to the amount of actual demand for economic security. And so, like, SUI's at 50, and this is not a criticism of SUI, just to be clear, right? Like, the reason they have this is because the tech stack is very good. But like, if you look at SUI, right, there's like this $50 billion token inflating at 10% a year. That's $5 billion going to validators, and they have $2 billion of TVL on the chain. What if instead we gave $5 billion to applications on the chain to grow and to scale and to acquire users and to do all these other things, and then the applications paid what they thought those block rewards were worth to the validators? That's basically what Berachain does. And so the way you can kind of think about it is most simplistically, it's returning value first to users and applications rather than to validators or to anyone else. And then by extension to validators over time. And then two, it's really separating out the operational components of a token, right? And so if you look at a normal POS chain, there's a single token that's designed to handle all of this different functionality. It's designed to handle the staking functionality. It's designed to handle the gas token functionality. It's trying to return some sort of economic value back to folks through staking or through all these other different methodologies. Um, and that's hard, right? Like, it's hard for a single token to be good at doing all of these different separate things. And so why not use multiple tokens, right? And that's what Berachain does. Bearow has this gas token and stake token. That is the Bearow token. And then Bear also has this BGT token, and that's the governance token and the delegation token. And the two play together in really interesting ways. I definitely recommend folks read more about that if this sounds interesting to you. But it also is kind of like the fee generating token as well, right? And so there becomes this like really interesting way for folks to optimize for exactly what portions of the stack they want exposure to, and in doing so return value to the other group that doesn't necessarily care about that portion, right? And so as a result, I think you end up with like better value creation and then better value retention.
Got it. Very interesting. It's a lot to digest. It is. I think I've always said this, but Berachain is probably one of the more unique or fascinating projects or approaches to, I guess, ecosystem or network developments in the space, and it has been for a while. So it's very interesting to hear. What kind of lessons have you gotten about PoL since you launched the testnet? Was that around a year ago? Have you
Yeah,
made
first testnet
any
was around a year ago. Second testnet was, I don't know, 6-ish months ago.
any shockers or pivots or any interesting learnings?
Oh
Or
yeah,
has it been
man.
smooth sailings? Oh.
No, holy shit, no. I think anyone who's been in here the entire, for even a large portion of the time knows that it was not smooth sailing, or in fact, anyone who even tried to use the first testnet knows that it was not smooth sailing. I think the first testnet was like the second or third fastest chain launch to 1 million active wallets on the chain. I'm not going to say 1 million users like most other folks because let's be real, they were not all actual users.
Yeah.
But it was crazy, right? Like, I wasn't even at Berachain at the time, but I was one of those users, and I was like, oh my god, this shit sucks. I can't land a transaction.
Mhm.
But like, the reason for that was because if you kind of rewind back to that era, the Berachain tech stack was really, really different. And so today, let's like actually say what it is today. I think it's a little bit better. We have this ETH execution client, right? And so you can run any Ethereum execution client out of the box on Berachain. That means we're fully EVM identical, versus even a lot of EVM equivalent. You'll hear that thrown around a lot. Chains use like a modified version of a singular client. Right now on Berachain, maybe we go that route to continue to optimize performance over time, but for now, right, like, you can actually use any ETH2 client out of the box, and so you get client diversity day one, a lot of nice functionality from that. The ETH client then gets wrapped into this thing called BeaconKit. You can think of BeaconKit as basically just like a translator for ETH2 execution clients into our consensus engine, right? Because ETH is designed to use ETH consensus. It's not designed to use another one. And so what we do is we basically allow ETH clients to use another consensus. And for us, that consensus is Comet BFT. And Comet BFT is a extremely battle tested Cosmos loosely based consensus, right? And so basically, it's like we're taking two battle-tested components, Ethereum execution and Cosmos consensus, and we're kind of smashing the two together. And that thing that smashes the two pieces together is a big portion of the tech that we've been working on for the last while. And it's quite complicated. It's a problem that like a lot of folks have actually tried to do research on and work towards, including actually at Polygon, my old job. And it appears that we're kind of like one of the first groups, if not the first group, to get a working implementation out there. And so, you know, what did it look like before? Like, why were there issues before? We had this thing called Polaris, which was actually like a basically completely different tech stack. The economic engine on top has always been pretty consistent, but the actual chain engine under the hood was very different. And Polaris was one of these chains that kind of offered EVM equivalents by basically building on top of Cosmos execution clients. And the problem with that is that Cosmos wasn't really designed to handle the amount of load on the execution client side that we were seeing. And as a result, the chain basically fell further and further behind. And there was so much kind of chattering happening in the mempool that RPCs got overloaded and no one could land a transaction at all. And so went back to the drawing board, switched from Polaris to BeaconKit. That's why there was a long gap in between testnet 1 and testnet 2. It's because we actually sat down and said like, oh shit, like this doesn't work. We got to do something else. And then came back with a second product that appeared to work better. We shipped a third testnet. That one was more private. And then got to like continue making upgrades to the core code base and until we got to the point where we feel pretty good about where it's at now.
Okay, got it. So yeah, not really smooth sailings throughout, but
Yeah, I mean,
that's kind of the
if
way it
you're
has to be.
expecting smooth sailing in this space, you should probably go to a different space.
Yeah, yeah, I think so. To pivot away from the tech side and to talk quickly about the community. It's of course probably a question you guys are tired of answering, and I'm not sure if there is an answer to it. But I guess in the most basic sense, like what's the secret? Like Berachain has developed probably one of the strongest communities in the crypto space as a whole. It's one of the only communities that's like managed to stay activated and interested in a project for more than a year. Like what you typically get is like there might be a massive community and then testnet launches and it dies away after 2 months, or token launches and everyone kind of moves on. How does Berachain maintain kind of I guess active interest and participation in its community?
Yeah, I think there's a couple pieces to that. The first is that I'm gonna be real, right? Like post chain launch, post TGE, it's a different ballgame, right? Like there,
Yeah.
it is actually different. It is easy, not easy. It's not easy. It is easier to retain mind share and interest when there is something that people have to kind of like look forward towards, so to speak. And that doesn't say that like posts mean that there won't be stuff to look forward to. There obviously will be. But it's just different, right? Like we can be pretty honest with ourselves about that. Um, and so, within this landscape, we're well aware of the fact that things are going to be different really soon. Um, the second thing is, why is there this interest? I think that there's a couple things, right? It's like there's this piece of overhead in the history of Bearchain, right? Like I said, like this has been around for 3.5 years. And it's really, really organic, right? Like it's spun out of an NFT project in a Discord. I don't think you get more grassroots than that in this space. The seed round was more community members and DAOs than it was VCs. The NFT collection is largely held by retail folks and community members, right? And so the end result of that is you get like really organic traction. The second part of that is this has been getting built for 3.5 years in public, right? Like you get folks that believed in it and didn't believe in it and washed out and sold to someone else. You get folks that never believed in it and dumped halfway through, right? Um, and what you end up with is this group of people that, like, for better or for worse, was like me, just stupid enough to stick around the entire time, and believed enough to see this thing to fruition. And some folks like me, a meaningful portion of the company actually, were folks that came from the community. And so it's not like a group of people that are here for whatever mercenary reasons, right? It's like a group of people that are here because they believe in what is being built and have for a long time. Like Smokey didn't have to get on the phone and convince me to come to Berachain. I wanted to be here. Um, and
Yeah.
so that makes a big difference as well. And then, I think post mainnet, the big focus is going to be continuing to innovate, right? Like it's if proof of liquidity is successful for the things we think it'll be successful for, how do we lean into that edge, right? Clearly, people are speaking and saying that they care about the way that we think about blockchain, right? That they care about this idea that blockchain is more than just making the chain go really fast. There's something in this idea of returning value back to the folks that are creating it. And I think that's kind of like very metaphorical for a lot of the core tenets for why folks got into blockchain as well, right? Um, and so there's a big edge there, right? Like over time, people are going to copy elements of proof of liquidity if it's successful, and the moat will be less differentiated. But being first to market is important. And being able to build on top of this stuff and continue to innovate and be thoughtful via projects like Boyko or whatever it might be are a big part of who we are, right? And so not letting that complacency kind of happen, and ensuring that we're always trying to be thoughtful, always trying to be novel, and if we're going to do anything, let's try and do it in a very barricaded way.
Got it. That makes sense. It's a good answer. I guess it's a good transition into Boyko. So you launched it. I forgot the exact date. I guess 2 months ago or so, 1.5. Can you tell us a bit about Boyko? What it is, what the motivation behind it is, and I guess how it's going so far?
Yeah, so just to be clear, uh, Boyko is not live. Um, Boyko will be
Ah,
live
okay, my
very,
bad.
very shortly. Yeah, yeah, no, you're all good. It's a common confusion. And so Boyko will be live really, really shortly here. We're putting the finishing touches on it right now. But basically,
Okay, so what I'm
what
seeing
launched
is
the
pre-deposit vaults. Or
exactly. So
got it.
basically, a lot of folks got really excited for Boyko, and they launched pre-deposit vaults that are going to allocate into Boyko when it goes live, which will then
Ah,
allocate
right.
into
Yeah.
applications on the chain. Hence the meme of pre-deposit vaults. I was trying to make it as clear as possible that this isn't even the
Yeah.
real pre-deposit. Um,
Yeah. Fair
but
enough.
yeah, yeah, and those are all run by third parties, right? Which is really cool to see that like a bunch of third parties got together and pulled in $2 billion to deposit into a product that I built, right? Like that feels very surreal. Um,
Is that
what is
coordinated, or
Boyko?
is it independent projects just doing this out of their own interest?
It started off with independent projects doing it out of their own interest, right? Like I genuinely had nothing to do with the first couple pre-deposit vaults, and then from there, right, like a bunch of other folks saw it and they're like, "Why didn't you tell us about this?" And I was like, "Fuck, I didn't know either," and so we kind of helped them coordinate the rest. But
That's the
like the
beauty of
basic
DeFi,
idea.
I guess.
Yeah, exactly, right? And it's the beauty of having a community that's really engaged and involved and knows what's up and isn't just like coming on for whatever X, Y, and Z reason, right? Like they just want to build stuff. And so, right, like what is Boyko? Boyko is this pre-deposit, pre-launch program that allows users to supply liquidity prior to Berachain mainnet launching into applications on day one of mainnet. And so I think a lot of people had really bad experiences with pre-deposits in the past because of stuff like Blast and Manta and all these other folks. Um, and this was something that kind of like always rubbed me a little bit weird in that like a pre-deposit system isn't fundamentally flawed. What was fundamentally flawed was the way that the folks built their pre-deposit systems. And in effect, there were like a few really big issues as I saw it. The first really big issue was lack of transparency, right? It was like, hey, drop some money in this multi-sig and it might unlock in a little bit of time, might not. We don't know exactly when this thing's going live. Um, and we don't really know exactly what you're going to get, and like maybe you'll get some points here from us, or maybe you'll get some other stuff, and it'll be cool, just trust me, right? And after the second or third time, folks start to get a little bit jaded, and it stops working, right? The second issue was that most of the time the money was just going into a bridge deposit effectively, right? Like it wasn't actually productive liquidity. And so if you look at how Blast kind of ran that portion, they had Blast points to get you to deposit into the bridge. And now everyone that's deposited both was earning native yield and points. And then they actually had to pay a second round of money and Blast Gold to applications to get that money into apps, because they realized what they did was they spent a bunch of money to get money on the chain, but that money was meaningless until it was in an application. And so I actually have to now spend more to do this second step. And the problem with that too is that by running this route, right, what you've actually done is said, hey, for just bridging over, I'm going to give you money. And so now your risk-free rate on the chain has gone up. And any application that then wants to take in that liquidity is effectively forced to pay more for it than they would on other chains, because they're now PvPing against each other for that bridge liquidity instead of working together to bring over liquidity from other chains, right? And so
Mhm.
Boyko is really designed to solve these things by, one, giving folks hopefully more transparency up front, right? I'm not going to sit here and say we've solved the points problem. We haven't, right? Like folks are going to continue to offer points if they want to offer points. Um, we're going to offer tokens because that's what we want to do, as are a lot of other folks. But some will still be offering points. But what we can do is kind of give folks more transparency into making it easy for them to figure out what might those points be worth down the line, right? What do you think the FDV of the project will be? What percentage of the total supply do you think will go to points? How many total points do you think there'll be, right? With those numbers, you can then back into a basic assumption on what the value of your points is, and at least be more transparent about the structure. The second thing is giving transparency around how assets are actually moving, right? And so the vast majority, if not almost all of Boyko, is fully non-custodial, right? It's all Solidity, it's all on chain, it's all verifiable, right? And so our goal was to recognize the fact that not everyone wants transparency, but if you want it, you now have it. And so that was a big important second step for me. The third was creating capital efficiency. And so, like, one of the things you'll see in Boyko, and you can even see in the pre-deposit vaults today, is for some of these pre-deposit vaults, if you supply into them, you might be stacking like 7 layers of yield, right? It'll be like 3 applications and Bearow tokens and a vault issuer and an asset issuer, right? And all these things combine to make it really, really capital efficient, right? Like no one person has to drive a ton of money into this, aside from Berachain, I guess. But no one person has to drive like a ton of money into this, because they're all stacking yield together to create an appropriate yield profile. And because it's done in the way that it's done, with money going directly into applications from the deposits, you don't have this double spend issue. And your hurdle rate is now, what is the most yield I can get from this asset not on Berachain versus on Berachain, right? And so instead of having this issue with like applications having to fight each other on the chain to offer the best yield for an asset, they can instead say, okay, what's the best yield on another chain for this asset, and how do I beat that, right? And so a big focus for me on this when I was designing it was like, how do I create an environment that doesn't put applications at odds with each other, but allows them to work together to hopefully come up um, with like an optimal solution. And so, I recognize I've rambled a little bit, so I'll pause there, and we're well over time. But yeah, it was something that we spent a lot of time on.
No, all good with the ramble. It's very interesting. So it doesn't sound like it's an easy initiative to coordinate. So props to you
No,
and
it's been a
the team.
literal nightmare hellscape, but I've had a great
Yeah,
time.
I can imagine. Jesus. Yeah. But yeah, I guess we are running a bit over time, so we'll try to wrap it up with two quick questions. So first of all, Yala is of course a very Bitcoin focused DeFi project. So that leads to the obvious question of what are the what are the plans for Berachain in the Bitcoin space, if any? Is there anything you can
Oh yeah,
tease?
man. 100%. Yeah, yeah. So I'll keep it pretty short here, but I think it should be obvious. I think we have $2 billion in Boyco. I want to say half of that ish, close to $1 billion, is Bitcoin related assets. Um, and probably over half of the asset issuers in Boyco are Bitcoin asset issuers. Whether that's SBTC, Solve BTC type wrappers, FBTC is another option, LSTs, Babylon based, so Lombard, Solve BTC.BBN. There's a ton, honestly, a ton of them. I don't want to do anyone dirty by leaving them out, but I'm going to inevitably. Non Babylon based kind of LST options like EBTC from EtherFi, which is running through Veda Vaults. Like, this is something that for us was like when Smokey and I were first chatting when I joined, and like he was like, okay, what are the main things you want to be opinionated on? The first thing out of my mouth was Bitcoin, right? Like, genuinely, it's
Mhm.
like such a massive opportunity. It's such a cool design space. It's such a problematic design space, which is part of what makes it interesting for me, right? It's like
Yeah,
it's so fucking hard to build on a structure with no smart contracts. Um, and so we spent a ton of time on that. And I hope that that will be reflected in a lot of the application stuff that you'll see on Berachain's launch. And so our real goal was to make Berachain the home of BTC-Fi, in terms of like, where do I deploy these assets? Where do I get best yield on these assets? Where are the use cases for these assets?
got it. It's the answer I wanted to hear. So, and last question before we let you go. What's next? What's Q5? Or when can we expect the Q5 developments?
Soon, very
Soon.
soon. No, I promise. It's happening soon. I know we always say soon, but no, it's actually soon. So
Okay,
stay tuned.
awesome.
You'll get some updates very shortly here, guys.
Perfect. That's what we all wanted to hear. Thank you so much for joining us today. And
Of course, it was my pleasure. Thank you for
yeah,
hosting.
yeah. We'll stay in touch and hopefully lots of synergies between Yala and Berachain in the future.
Absolutely. Great chatting, guys.
Cool. Speak soon. Bye bye. Thanks, everyone.
Bye. Thanks, everyone.